What's going on, guys? Connor here with another video. And let's be honest, trying to trade stocks, it can be really hard. Trying to buy them at the right time, sell them at the right time, know which stocks are going to move, how much they can move, when the right time is even consider buying. It can all be a mess. Hands down, it can be a challenge, and I got to tell you, it's taken me a long time to get it down myself. But over the years of trading, I've kind of been able to find out and figure out where my mojo is in the market. And with that being said, we have a really cool scanner we're going to show you, and I think you guys are going to love it. This scanner was actually built by one of our students. If you look at this chart, you're going to see these diagonal lines. If you guys have ever followed my channel before, you guys are going to know that I usually have these diagonal lines on my chart, and that's my trading strategy. After using it, one of our students developed a scanner around that so that he can pinpoint when stocks are starting to meet criteria regarding this strategy. So before we get into the scanner, I got to show you guys this so that you know exactly how to use the scanner and the psychology behind it. So the first thing I want to do is just show you the lines we have. I put a red line, a green line, this yellow line, and then this middle kind of beige line, okay? What you have to understand is this channel is based off of, I'm just going to say STAT. It's based off of statistics, okay? Statistics. Probability. That's all trading is an educated guessing game of probabilities, okay? So what I need to first show you is we're going to label this. Okay, this is 3 standard deviations. This is 2 standard deviations. That's a bad 2. This is 2 standard deviations. This is 1 standard deviation. This is mean or average, okay? This here is 1 standard deviation, 2 standard deviation, and 3. So the way it works is it's always pretty much starting from the midpoint, you could think of, as in from the middle point to here is 1 standard deviation. From the middle point to here is 2. From the midpoint to here is 3, and vice versa on the way down as well. Okay? Now that that's pretty clear, I'm going to bring up a chart from the internet. This is a graph so that I could easily explain this to you. That channel that we had, and let me show you, let me bring this down. You see this channel? This is the same thing I'm showing you here, but it's just different. This is going up and down, vertical, whereas this is going kind of side to side, right? So let me explain this. Okay, look at where it says deviations on the bottom. 0 is that middle line on the stock chart. 1 is that yellow line. 2 is the green line, and 3 is the red line. So let's go back. 3, red line, green, 2, yellow, 1. Okay? It's the same thing here on this chart. It's just flipped a little bit differently. So if we moved it sideways, it would look almost the exact same. And like I said before, it's a probabilities game. So that being said, if I woke up today and I told you guys that the stock is not going to go outside of 3 standard deviations. So if I woke up this morning and said, hey guys, the stock MXC is not going to go below a price of $7.92 and it's not going to go, it's not going to go below a price of $5.45 and it won't go above a price of $20.31. I would be right 100% of the time. If I woke up the next day and said, hey guys, the stock is not going to go below the red line and it's not going to go above the red line, I would be right 100% of the time. Because based on statistics, almost 100% of the time, data plots will not fall outside of 3 standard deviations, or the share price of a stock will not fluctuate or deviate so significantly that it's going to trade outside of 3 standard deviation plots. Got it? So if we go to 2, right? If we went to 2, you can see where 2's at, 96. So if I came to this chart and I said, hey guys, MXC is going to stay above the green line and below the green line, 96% of the time I would be correct. The price would not go outside the green on the bottom and it would not go outside the green on the top. I would be correct 96% of the time. Okay, let's go back. If I told you that, hey guys, the stock MXC is going to stay in between 1 standard deviation on the day. So if I woke up today and said, hey guys, MXC is going to stay in between the yellow line and in between the yellow line on the top, there's a 68% chance that I would be correct. So now you can see the margin of slippage is becoming bigger, because remember, there's a 96% chance the price action will stay in between the green, and there's a 68% chance that the price action or data plots will exist within the yellow, okay? So now when you reverse think that bias, let me explain what I just told you. I basically just told you that 95% of the time, right? 95% of the time, price is going to be above the green or below the green. So that means 5% of the time, the price is only going to exist outside of the green. So what's that tell you as soon as price gets down low to the green? 5% of the time, price action will exist outside of the green. In 95% of the time, data plots will be in between the green to green, and 100% of the time, the price will be in between the red. Okay? So based on statistics, we are trying to put you in a more risk-oriented probability trade, which is that when stocks are trading down near the green, there's a 95% chance that that stock's data points are going to end up being in between the green. So it will probably bounce. It's a very strong winning strategy. So our trader in our room by the name of Cato Beats has developed a scanner that basically scans for stocks that meet the criteria of being down towards the green level, and that's what we're going to show you here today. Again, the link will be in the description below. Follow that. Go to TD-Ameritrade. You're going to link it to your platform absolutely free. So if you don't want to watch any more of this video, you can go to the description below. There's a link. Click it. Bing, bang, boom. Connect it to your TD-Ameritrade account, and you are done. All right. So now what we're going to do is we're going to bring up the scanner. So this is what the scanner looks like. We have a couple categories, okay? The first two are market cap, 500 million. Next one is stock volume. I have it as 2 million. The preset, I believe, is going to be 400,000. Doesn't matter. You can change the volume to whatever you want. The higher you go in volume, the less stocks you're going to pick up. The lower you go in volume, the more stocks you're going to pick up. The more work you're going to have to do. That's all, okay? So the volume will really just shrink or expand your list of stocks to choose from. Okay, the market cap, same thing. The larger the market cap, okay, larger the market cap you are scanning for, or lower the market cap you are scanning for, is essentially just either going to add or remove more stocks from the watch list that meet the criteria of market cap. So I can tell you why we have 500 million as market cap. The reason we have 500 million as market cap is because ideally when you have a higher market cap company, it's seen as more reliable or a stronger company, or it's not going to be some junk stock. So in the theory, they are a little bit more reputable companies, or sometimes stronger. So therefore, they might work a little bit better with this strategy that we have in place, or the stock would be more likely to bounce because it's not just some garbage stock that's trying to dump out and keep falling or whatever, okay? And so that's why we have 500 million market cap. The 200 or the 2 million or the 400,000 in volume is really just there for you to differentiate between what sort of stocks you want to pick up, and if you're trying to find a stock that's trading on significant volume. Personally, I like to raise the bar on volume because I want to make sure that I'm trading something that's liquid. So a lot of times I'll start with the high volume, and if I can't find anything, then I can always shrink the volume down and then start seeing if I can pick up some other stocks, right? Why would I go for worse when I can go for what I think is better, and then maybe shrink that list a little bit lower on volume as I can't find anything. So again, the higher you go in volume, the less you'll find, and the lower you go in volume, the more you will find. Now, these bottom two studies, these are kind of custom inputs, so we're not going to go into the building phase of it, but I'll explain them to you, and that's why we have the link down below, so you can just click the link and just directly import the scanner to your software, and then you just have it, it's done. Okay? Two bottom studies here. This is the standard deviation channel. So if I were to bring this back, that channel on the screen now, that is what is inputted into the scanner. The channel on the chart is in the scanner. The chart to the scanner. That's all that's happened, okay? So we have put that channel in the scanner, and now we're telling the scanner to say, hey, when a stock goes down near that green line, can you tell us it's there? Because it might be ready to bounce. So this first line we have here is basically scanning for stocks on a 1 minute time frame. Okay, as you can see, 1 minute here. on a 1 minute time frame that are below 1.25 or pretty much below or trading or closing below one standard deviation. And it's the same thing for the bottom one, but just on a 5 minute chart. So we're basically scanning for stocks that have a market cap of 500 million, and on this scanner that have a volume of 2 million, and that have or are trading on not only the 1 but the 5 minute chart below the 1 standard deviation mark on both 1 and 5 minute chart. That there is telling us that the stock has been sold down, and it might be in an oversold in a buying phase location. Okay. And now if I can just quickly run through a few examples with you guys of stocks in their lower deviation so that you can wrap your head around how you might actually go about using the scanner. And then I'll actually show you guys a couple results from the scanner. So if we just kind of jump around here and we look at stocks, here is the stock SPY, okay? Look at where we were, right? Trading down at the red. Now, just know that this is 2 standard deviations, right? So the scanner essentially could have picked up this down at the 2 mark, right? Trading down, and look at the bounce, okay? Look at where we're getting now. We're getting up to the red line on the top. 96% chance the price action and plots will exist within the red line. 5% chance, 4% chance it will exist outside the red line. So when our scanner scans for stocks trading down near the red line, there's a 5% chance that those data plots will continue to exist below the red line or continue trending below the red line. That is the standard deviation probability of statistics right there. Okay, so let's go and take a look at something like Netflix today. Okay, look at where Netflix is at. Okay, Netflix didn't really do a whole lot. Bad example. Let's go look at Snapchat. Snapchat had earnings. Okay, look at this. Look at yesterday's earnings report. Snapchat goes down to the red line, bounce. Okay, there you go. Okay, we could go look at, let's see what Tesla did today. Okay, look at Tesla. I mean, Tesla ran up to this one, came back down, ran bound to tread. And so again, remember, 65% of all the plots will exist in between one standard deviation. So from yellow to yellow is 1. Look at where the price action usually is at, in between 1 to 1. So most of your price action is going to exist in between your 1 standard deviation channel trend. Okay, 95% of the time it will exist within the red. So 95% of the time all prices will be in between red. Okay, so you can see on this, Tesla is primarily staying in between the 1 standard deviation mark. All right, so now let's actually see what kind of stocks this is picking up, and then we'll take a look and see what they look like. So we're just going to go ahead and hit the scan here, see what we come up with. Okay, so we have come up with a couple options here. We came up with some JP Morgan, some United Airlines, a couple others. So let's just see where those are trading and see if the scanner is in fact scanning for what we're asking. So this is JP Morgan. JP Morgan is currently trading below 1 standard deviation, okay? And we know that 65% of the data points will exist within the yellow, okay? So we might be able to say that, if you look at it, this stock might be down kind of near some support from yesterday, and we're trading in the lower phase of the day. Yeah, you know what? This might be trying to kind of round up and maybe bounce, okay? Now, let's see what else we have here. We have, we have United Airline here. So look at UAL. So UAL is currently trading down here at the red level. 5% of the time, 4% of the time, the price action will exist below the red line. And then it will try to reverse back into the market. Because we have our statistical average right here. So there's a good chance that we might try to bounce this market back in by the end of the day. So the scanner is in fact picking us stocks that are trading below our 1 standard deviation or near our 2 standard deviation mark that could in fact be getting ready to bounce here, okay? This is Morgan Stanley. This is on the scanner. Morgan Stanley just came down to its 2 standard deviation mark, the red mark. Price action typically only exists below or above the red mark 4 to 5% of the time before trying to reverse back into the market. And you can see the price action of Morgan Stanley is already trying to reverse a little bit back into that market. Whether or not the trend continues down, again, that there's more to that story, okay? But you can see price action is trying to remain within that trend, right? That typical deviation trend. So I hope you guys liked the video, but that's pretty much all we have for you. See, what we're really doing here is showing you guys a little bit of our trading strategy mixed in, a little bit of our trading strategy mixed in, to a scanner. So it's really awesome. I'm really super stoked about it. It's been picking up some pretty good stocks over the past couple days that we've been using it. And so again, definite big shout out to Cato Beats in our chat room. Also note our chat room, there's a link to it in the description below, so you can join that there too. So if you guys ever want to ask questions of me or some of the traders in our group, you can feel free to do so. Hope you guys liked the video. I hope you learned something new. Links in the description. All you gotta do, click it, bing, bang, boom, and install it into your Thinkorswim platform. And if you guys liked the video, hit a thumbs up. I mean, I think this is good stuff, ladies and gentlemen. So everybody, take care. See you on the next one.